Hi, this is David Carr. I'm your Milford, New Haven Metro real estate specialist since 1997. Today we're going to look at some national information about COVID-19 and our recent real estate market, and then we're going to apply it to local information. So, we can see how compelling interest rates were a major driver in 2020. This is an inverse chart, so the rates were lower as it went higher, and you can see they've started to come up a little bit. So that's an important thing. State by state look at second home purchases is interesting because Connecticut led the nation year over year, followed by Oklahoma, Vermont, and Montana. Home orders, new orders were down sharply. This shows you the total in 2020 and 2021 year to date, May, June, July. Orders are way down, so this might contribute to some of the lack of inventory. The supply is starting to go up. We saw the bottom part here at the first quarter of 2021. This shows you the Great Recession, a lot more property available then, and less property then after the Great Recession, and people started buying some of those foreclosures. So it's been pretty stable between 2012, but still slowly going down. So maybe people are staying in their homes longer. Historic price surge starting in March of 2020, going up to June of 2021, and actually coming down a bit in July of 2021. So this could be all attributed to COVID-19. Obviously, mortgage rates, historical mortgage rates have been very low. This is January 2021, September 21 at 2.87%. This is about 2.5. You can see how it was 5% here according to Freddie Mac. Projected to go up maybe 3.5% by 2023, which isn't a huge amount, maybe 12%. And mortgage spreads, this is interesting, the spread between the Treasury yield and the mortgage rate, and when COVID-19 happened, the spread went way up and has worked its way back down to a point of recovery, moving back into the normal, which is a good thing for our stability. Affordability is obviously how easy it is to get a property and finance it. It was very difficult as we approached the Great Recession. More properties became available, property became more favorable, but we've seen this moving up. So we're moving up to where it could be less affordable to buy a house in the future if interest rates change. Obviously, it's projection. And underwriting is good because it's coming down. It's a little easier to get a mortgage since April 2020. As you can see, the underwriting criteria have relaxed a bit. Forbearance are the properties that are protected. People don't have to pay their principal, maybe just their interest. We had up to 8.5% in May of 2020, and a lot of people have come out of forbearance down to only about 3.2. Not everybody in forbearance doesn't pay, but they're in a position where they're protected. But not many forbearances actually end in distress, which is a good thing. Repayment plans, short sales, deed in lieu is only 2%. Lots of people are paying, and lots of deferrals. A lot of people have more money in the real estate now. There's only 2% national equity and 35% nationally with no debt, and 63% with positive equity. So don't take out a loan on your house. Live in your house and make it your safe place out in the world. If forbearance turned into foreclosures, if all those 3% actually went in, then you'd see a projected surge in inventory, which would bring us back to a little bit after the Great Recession. So we don't know if that's going to happen, but if it did, it certainly would be nothing like it was before the Great Recession. But the renter demand, obviously, a lot of people want to rent. July 2020, and more people wanted to rent all through 2021. It's starting to back off a little bit, but this has led to a fact that single-family rentals are at record levels. So you might see a lot more renters in your neighborhood wherever you are. And second quarter of 2021 was as high as the first quarter, which is an all-time high. And this has created a demand for single-family rentals at an all-time high. So investors are recognizing this is obviously a good thing to do, is to buy a property and rent it. And they're also building. People are looking for land. They're building communities, rental communities. It's a very interesting thing as you look around the country. Something we can talk about here, interest in land from build-to-rent players. They want to get land. They want to put people on those rentals. So that's the way it looks here. This is a national report. Your market is hyper-local, and that's what I specialize here in New Haven, Milford Metro, and Southern Connecticut. So feel free to reach out and come meet, and we'll help you make a good decision when the time is right for you.